Hey everybody, it's me, Gregory Mannarino. How are you today? It is Sunday, September 23rd, 2018, and welcome to my newest and probably loveliest new segment of Markets, a Look Ahead. We are going to try to make some sense of everything that's going on right now. And there's a lot going on, and I want to talk about that. We're going to look at some charts and try to, again, put a perspective on what we can expect to happen starting tomorrow in this crazy market. So, what I'm going to need you to do, click on the link in the description of this video. It will take you to my website, traderschoice.net, and we're going to look at a bunch of charts. So I will see you there. You can watch this video. If you are there, well, I guess let's start. I'm going to open up this page here. Where are we? Here we go. All right, now I am on my lovely website. Let's set the stage here before we look at some charts. So we just found out that China has canceled their talks with the Trump administration with regard to these tariffs. I do not believe this is going to be stock market positive. Unless something gets resolved by the end of the day, that's going to affect stocks, in my opinion, in a negative way tomorrow, Monday, when the market opens. There's also something else weighing on the markets, at least for tomorrow, in my view. I could be wrong on this, but I'm just telling you what's on my mind here. The Trump administration is about to embark on some antitrust whatever against Facebook and Google. That is also not going to bode well for the tech sector. Tech has been a driving force in this market, so there is another potential weight on the stock market. But with that said, there's no doubt about it, this market seems to be bulletproof. And although, and I would really like to see this, I alluded to this on Friday. With regard to this market, it went up too far, too fast last week. No surprise to any of you that followed my Markets a Look Ahead segment last Sunday. I said the market was more than likely going to be higher, and it was. As a matter of fact, it was record-setting. So this week, let's set the stage here. Right off the bat, we got these China tariff talks that have been canceled by China, apparently, and these antitrust, whatever you want to call them, against Google and Facebook from the Trump administration. What I would like to see, like I was saying, is these two things weigh on the markets early on. Let's say Monday and Tuesday. I'd like to see this market burn some off. Then, by midweek, I'd like to see the market rebound. This would be a really good scenario, in my view, because, again, market's gone up too far, too fast. Got to give some back. That would set the stage for a move higher in the market. Look, we all know this is not real. I keep getting emails and more emails about it, and it's just fake. But we know it's fake. And they're going to keep pumping this, forcing cash into the stock market, especially because these midterms, we're like right here. And again, look here, that's the stock market. Don't look here, our real economy. You know, everyone thinks our economy is as good as it gets. Well, that's what I've been hearing from our president, but it's just not true. It's a distraction, but that does not mean that we cannot make money in this market. We know what to look for. We know what we should be doing for the long run, putting our cash into hard assets. There's no doubt about it. Becoming your own central bank, betting against the debt. In my view, that's the best trade of them all for the long run. So let's start looking at some charts. Number one thing I want you to do, scroll all the way down to the bottom here and have a look at my gauge. This gauge, again, has never been wrong. Not one time, not one ever. 1 week since I put this up here. Again, this is a weekly gauge. I know a lot of people, it's insane. It says right on top, below, current technical position of the S&P 500, brackets, week. Some trolls are there, oh look, the market went down today. Greg's gauge is wrong. Really? Duh. It says week. Okay? It's too much. But this is, you know, look, either they're trolls or maybe they're just, I don't know, dumbed down. I think that's more than likely the case. But as you can see here, this thing is a strong buy. Again, a weekly gauge. That does not mean, and I hope, I really want this market to sell off come Monday and Tuesday. Monday and or Tuesday, or both days or one day. I want the market to sell off a little bit. Doesn't mean I'm going to get my wish. I want it to do that so I could buy some stuff cheaper. It's really the truth. I will not short this market. I haven't taken up a short position against this market in, I almost can't remember when. That's the truth. As all of you know, this guy sitting here, I exclusively trade credit spreads now. Getting in here on just buying calls or puts, yeah, you could make a stupid amount of money in a very short period of time. But it became too stressful for me, I'll be honest with you. So this is kind of like a more safe way to trade. And credit spreads, you do not have to be right, even about the direction, if you set these up in the proper way, and you could still make money. Anyway, I'm not even going to go talking about credit spreads right now. Let's so with this gauge here, strong buy. Let's go right up here to my swing trading chart, SPX. Again, this is the S&P 500. I mean, look at this, people. Yeah, we got a little bit of this going on. That's that random walk with an upward drift that you would expect to see. Well, in a market like this, at least, where, you know, cash is being literally forced into stocks. Risk on, risk on, risk on. This trend is going to continue again, in my view. But this guy, again, would love to see this market burn some off come tomorrow, Monday, Tuesday, both days. I really would love to see that. We'll see if I get my wish at least one of those days. You know, I don't really talk too much about this day trading chart over here. Let's look at that day trading chart. This is SPY, the ETF that tracks the S&P 500. It looks to me like it wants to move higher here. You can see those red candlesticks. But again, I'd like to see a few more. And then this thing kind of take off. This is a day trading chart. So anyway, I think most of you are more interested in this center chart here. Let's look at a couple of other things real quick. Let's look over at this bond market chart. All of you understand the situation that we're in, at least that follow this blog here. The 10-year yield right now, as I am doing this, is stuck at about 3.06. We do not want to see that moving up meaningfully higher. Although, if geopolitical tensions start to heat up, we will see a few things go on. Now, what I want you to do is look down at that dollar bullish ETF chart just below the bond market chart. We do not want to see the dollar get stronger here. We want to see the dollar remain where it is or get weaker. Now, we may get a knee-jerk into the dollar if geopolitical issues heat up further. So what we do not want to see is the dollar get stronger, and we do not want to see that 10-year yield climb. We want to see that it stay where it is or come down a little bit. Now, there are no lines in the sand here with regard to the 10-year yield for all of you that think you hear things that I say, because I never put a line in the sand here with regard to the 10-year yield. It all depends on the dollar, and I have discussed this a million times. There is a compensatory mechanism that exists between dollar strength and what the 10-year yield is doing. So that is the main reason why we cannot have, ever, at least now, a line in the sand with regard to the 10-year yield. If one develops, I will let you know, but I sincerely doubt that's going to happen. Let's look at a couple of other things here, people. Let's look at precious metals. Where it says SPX on my swing trading chart, I want you to put in GLD, enter. This is, again, the paper derivative of gold. It is not real. It is not on the elemental chart. However, it exists. Anyway, if you notice, and I actually alluded to this last week, I said it looked like we were kind of bottoming out here with regard to gold, or at least the paper derivative, which I have no faith in anyway, because they'll twist this, manipulate this, and rig this any way they want. It's not real. But as you can see, we've kind of been flatlining for a little bit of time. Doesn't mean we're not going to get another move lower here. We could absolutely get a move higher, but look up the London Gold Fix. This is your homework for today. London Gold Fix. The price of gold is fixed by the major banks. It's not real. Even the price of physical is not real. It's just gold and silver are the most rigged things on God's earth here. Let's put in SLV. Enter. Same kind of thing. You know, downtrend here, but we're bottoming out here. Not really too sure what to make of this. Silver is very volatile. Could it go lower? Yeah, but we might be bottoming out here. But again, it's not real, and it drives me freaking nuts. It should drive you nuts too. Let's look at a couple of other things, since we heard that President Trump is going to start some kind of an action against Facebook and Google. Let's look at Facebook. Put in FB, enter. All right, as you can see in the middle of this chart, Facebook took a nice plunge there. It's kind of gone down. Looks like it's trying to find a bottom, but if this thing is true, with the Trump administration here, Facebook could take another hit. Let's look at Google. G-O-O-G, enter. Trying to bottom out here too, as you can see to the right side of that. But I'll tell you something, I'm not really completely convinced that if President Trump decides not to do this, we're in a little bit of trouble here with these two, and this is going to pull down the tech sector. Anyway, so here we go, my lovely friends. Let's try to put this into a perspective, what I would like to see and what I believe will happen during the week. Geopolitical tensions with regard to tariffs should weigh on this market come Monday, tomorrow, Tuesday. I would love to see that. I want to see the market sell off a little bit. I don't know if I'll get my wish here. I'm just telling you what I'd like to see. Issues with regard to the tech sector with the Trump administration, that also has potential to weigh on this market early on. I don't think it's going to be long-lived. I believe that this market will finish the week higher. I know I could be going out on a long limb here, and it does depend on a couple of things. Bond market, you all know that. Keep your eye on this chart. Dollar, keep your eye on that chart. We want to see the 10-year yield remain where it is or go lower. Of course, we could go a little bit higher here. Depends on the dollar. If the dollar weakens, we'll get that compensatory mechanism here with regard to the 10-year yield. We could get a 3.09, maybe even a 3.1 if the dollar weakens enough, and it won't affect the market. These are things we need to watch. But just looking at what's going on here, I would have to say I believe the market will finish the week higher. We'll see if I am wrong throughout the week. It's always interesting, isn't it? Anyway, my lovely friends, I know this has been getting kind of long-winded. I hope you're enjoying all this. The charts here, put in any ticker you want. That gauge here at the very bottom, watch this. Pretty cool stuff. It's the truth. All right, with that said, I will see you, I'm not too sure about you, maybe, tomorrow morning. And as always, it'll be freaking lovely.